Hello traders, today is the 6th of February 2013 and the time in London is 3:27 a.m. In New York is 22:28 p.m. Happy trading to you all. This is the Asia session. This video is about flat correction. We're going to discuss tips and tricks about the flat correction. All right, very important. All right. So we know that the flat correction will take place after a strong up move or after a strong downtrend. In this for the stock that we are looking at, the General Electric, Epic GE, Gulf Eco, General Electric. Okay, we are on a yearly chart. We can see that from 1989 up to 1999, it was a bullish cycle, gorgeous. All right, you can see that the price went vertical here, okay, showing us that the trend was very, very strong, okay. And when you see something like this, you are likely to see after, okay, a strong uptrend, okay, a flat correction. The first tips when we are talking about a flat correction, when we see the A corrective move divided into 5 subwaves, okay, there is a high chance, this from here, where my cursor is down to this level here, that's the A correction after this strong move. The A correction will bring the price into the 50%, 61.8% Fibonacci retracement zone. That's the theory. The reality of the market can be different. But the tips that I want you to remember is that when the A corrective move is divided into 5 subwaves, there is a high chance that the B for Bravo, B corrective move will fail, okay, to go above the 50% or the 61.8% the retracement of the A corrective waves. Let me explain myself. From here to here, this is the A corrective move. If the A corrective wave is divided into 5 sub waves or 5 internal waves or 5 minor waves, okay, the following wave, which is the B correction, in the case of the flat correction, the B correction is from here to here, you will see that the B correction will fail, okay, will fail to exceed, okay, the 50% or the 61.8% Fibonacci retracement level of the A corrective wave. The pink line here, okay, that's the 50% Fibonacci retracement level of the A corrective wave, and the blue line here, this is the 61.8% Fibonacci retracement level of the A corrective wave. You can see that the B correction has failed to exceed, okay, the 61.8%. It went a bit above it only to come back below it. This is one tip one should remember, because the internal structure of the A corrective wave is usually 5 waves, but I don't like to say always. In the case of the C correction wave, the internal wave is very often, very, very often 5 waves. All right. So when we see the A correction very strong, you see, very strong, you see the tall candle, we tell you that it's very strong. Okay. When it's divided into 5 waves, we will expect the B correction, okay, to fail to exceed the 61.8% of the A corrective wave. You see here. So as the price starts going up here, we will say that there's a high chance that when the price reaches the 61.8% zone, we may receive a sell signal. But we will not force our expectation on the price, but we just know something, we have an edge, and if it's happening, we will take advantage of it. So, because we understand the wave principle carefully, that when the A corrective is divided into 5 subwaves, the B correction is likely to fail to exceed the 61.8% Fibonacci retracement level. This is one, okay, tips that you can use the either way together with the Fibonacci retracement to make excellent Fibonacci decisions. All right? You see how important the wave principle is for traders to look inside the price. So how do we see whether the A corrective wave is divided into 5 waves? Like this, we can't see the 5 wave. What do? We go to another time frame. In this time, I'll go to the monthly chart. We want to zoom into it, not to zoom out. We want to zoom into it, like macroscope. We'll go to a lower time frame. I will use monthly charts to show you the 5 waves. I've already drawn them to save time, so we can, what's happening here? Waiting for, what's going on? Moment, please. Waiting for my software to respond. Alright, so we will use another time frame like the monthly chart to, to zoom into the bigger picture, because on the yearly chart we couldn't see the internal wave, but now we're on a monthly chart, we can see them here. Okay, I just want to make it bigger a bit. You see this section here, this is the A currency wave from here to here. On this monthly chart we can see the 5 internal waves, or the 5 minor waves, or the 5 sub waves of the bigger A correction, because from here to here that's the bigger A correction. But inside it, looking inside the price, like I always say to traders, looking inside the price, not into the price, we have 5 waves. From here, 1, 2, 3, 4, 5. Can you see it? From here down to this level, from here up to this level, from here down to this level, from here to this level, from here down to this level. You can see that the waves are overlapping. The correction, the 5, if you see 5 waves overlapping like this is a correction. This is not an impulsive wave. An impulsive wave, okay, you will see that the internal wave should not overlap. Okay, this is a corrective wave because the waves are overlapping. Okay, in a normal impulsive wave, the waves should not overlap. This is one Elliott wave criteria. Okay, so when we see the A correction, for the flat correction be divided into 5 waves, there's a high chance the B correction that will follow has a high chance to fail to exceed the 61.8%. So we can, as a TSTWSY-S08 trader, if we understand something like this, we will be looking here for what? A cycle, a bearish cycle to start. And here it was. Also, as I explained to you, when a cycle is about to begin, brokers must fill orders first. So you see sometimes probably going up and down, up and down, up and down, up and down. Sometimes some trader will be taken out before the cycle will begin. This thing happens sometimes, and all we can do is to control it and to understand it. If we understand it, we will know how to handle it. But if we don't understand it, you see a cycle, and then you see, oh, the cycle has failed, and the cycle has resumed, and you are not there. But you want to understand what is happening at that point in time. Keep your eyes on the price itself, draw your channel, draw your trend line to make excellent decision at a low risk point. That's the key point. All right? So this is just a small tips about the flat correction. And I hope you have learned something from this video and will put it into use, okay, to make excellent decision. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. Speak to you soon.